Okay, let's see what the market has given us last week here for in the markets, and we're looking at the weekly chart here. Each candle representing 1 week of trading, and we're looking at the SPY to start with. And what I like about this is good news here. See how this week we ended up green, and actually we traded all the way down to the bottom over here and then recovered everything all the way up to the top. So this action here, when you combine these two candles together, is what we consider a bullish piercing candlestick formation, meaning that it had uh, gone traded down all below the previous candle, and it has recovered and closed above 50% of the previous candle. So if you measure this candle from here to the top of here, you've gotten right at the 50% line. Let's verify that here. So let's measure this from here to the top of the wick. And the 50% line, as you can see here, is right over here in this area, and we closed right at it. So that is a very bullish sign here. Could mean the potential change of trend here on the weekly. This is the 50-week moving average here, which represents basically the 200-day moving average. So we had this formation, plus we had high volume. So this may be the low, at least for now. Uh, Next area of resistance is going to be right back at the 200-day moving average, or the 50-week, right at the 566 area. So that's what we got on the SPY. So we're still not out of the woods yet, but at least now we're starting to possibly see some ray of hope coming through the woods here. So let's go look at the Qs now. In the Qs, you can see here the piercing candlestick action, just like the SPY, and high volume as well. So that is also very bullish. So that is very good. Again, we got the 50-week moving average that we got to contend to, but at least we may hit it, pull back a little bit, and then break through it. Possibly, we don't know. We just have to take it a week at a time on this. Looking at the IWM, this one not as much. You could see it did uh, trade below it and recovered. So the good news is it's above the previous candle, but we did not make it up to the 50%. So it's not as strong. Still showing some weakness. We do have good volume here coming up. So that is good. That shows there's a lot of buyers stepping in. And then the best part about it is the semiconductors. Got to focus on this one here because has the best bullish piercing candlestick action here of all the SPYQ. So this is very good. We do want to see the semiconductors uh, try to show more strength, which it is doing that. So the we still going to have to contend to the 50-week moving average up here at around 242 area. But for now, we could look for a bounce up in this area if the market's able to get traction. So that's on the weekly. So now let's go ahead and zoom down to the daily here. So let me switch over to the daily. I have to move this up a little bit. And let's go to the daily. There we go. So here we're looking at the SPY. And this time let me turn on the settings here. So this is the 200-day moving average, represented by the red line. The 50 is the blue line. You could see we're getting a confluence of the trend line here. So there's going to be major resistance here to try to break out of there. And then let's see where we are on the 20. You can see here's the 20. It's going to be coming down to that area. And then, so we may have a possibility. Now, this is just from my experience from the way I'm seeing the patterns develop. We might have a inverse head and shoulder forming, meaning that we have this shoulder here forming along with the head right here. So if we get the bounce, let me throw that in here. If we do get the bounce up to here and then pull back, say halfway, and then bounce back up, then we have the chance of breaking above higher. Like so. So that it would be a positive view of the market. So let's just hope that happens and go from there. Let me just take these out. Okay. Um, Otherwise, we may then, worst case scenario, bounce up to this area and then we'll make a next leg lower, which we do not want to see that. So those are the two scenarios that we may be encountering. So for now, we want to just focus on this right here at 575 on the spice. Now, if we throw in a VWAP, say from the high here, you can see we have to, the bears are still in control, but we're below the VWAP line. If we can get above it, then that would help us get above, but we still have to contend to these two moving averages in this area. Uh, so this is going to be a very important area we're going to have to keep an eye on for now. So let's take these out, the drawings. Let's look at the Qs. Pretty much the Qs has a similar story here. We have the 250. The lines are crossing right here. We do have the potential head and shoulders again. Let me pull that up here on the drawing. Okay, here's your shoulder. And here's your head. So this may bounce up to this area here and then pull back. And hopefully we can get the bounce up higher. But we'll just have to wait and see. Take one day at a time. For now, this is going to be our target here. If we can get the bullish action to come up to here and hit. And then IWM, this is the weakest of them all. We also have the bullish head and shoulders again. Inverse, I should say. There's your shoulder, and this is your head. Now we're going to get up to possibly a shoulder and then get the pullback and then get the breakout. Let's just hope so. For now, we'll just trade it carefully and watch it. We will hit some resistance at the 50 in this area, which would be right at the top of here at 208. Now let's look at the semiconductors. And you can see you have this strong green bar here. This is the control bar. We're trading right in it. Need to see a breakout. First area of resistance it's going to have to battle is right here at the 50 and then at the 200 here. Right in this zone right up here. Again, we have the inverse head and shoulder formation possibly building up right in this area here. So those are the things to watch out for. Let's take a look at Bitcoin. Get drawing out here. With Bitcoin, you can see it's still under the 200. If we draw a trend line just to see, it'd be the first day of breaking above the trend line. But still, we still have the 50 and the 200 to contend to. So, the market's still very need to be very cautious. We're still in the bear camp. till we can get everything pointing upward again. And then the only thing here that's been really doing good is the gold, as you can see here. However, you got a doji up here, meaning that the indecision, and you have to be very cautious. Uh, might have a pullback, or it could continue to go up higher. But for up here, if you've been lucky enough to catch the swing trade here, this is not to be greedy. I would suggest to either take some profits or just close the position and just wait for the next leg up or for the pullback on this. And then just looking at energy here, the oil, you could see we we still under the 200, under the 50, which is good for gas prices, but not for the market here. That means the market is getting weak, and if the market's weak, we don't need as much oil. We do got good volume here. We got a nice strong up bar here, so we may potentially be seeing a move back up to this area at 75. Let's see where we are on the swing trading here. You can see it did close above the 5-day moving average. And so if it can continue to close the next day before the end of the day above 66.79, then I would say we can see a move up higher, at least to around this area, which is 10%. All right, so that's what I got for the market. Thanks.